To do some instant analysis on these numbers. We've got August retail sales in the US posting their largest gain in 5 months. We've got the US dollar looking weaker at almost 130 on the euro dollar, and then we've got gold hitting a new all-time high. Usually gold will only react at this stage if there's a need for a safe haven status, and if we're seeing good traction in retail sales, can you try and make sense of this for me?
You know, Bronwyn, we're kind of like these 7 blind men all describing an elephant. We're feeling a different part. I haven't been at the desk in over 24 hours, so I'm pretty out of touch with what's going on. But the facts that you've laid out, first fact is always dollar euro. Yeah, it's jumped from 128 to almost 130. That's about 1.5%. Something's caused that big jump. Is it just this massive growth in retail sales? The States has been looking for some kind of good news, and maybe that's it. We've had the S&P 500 now up 6 out of 7 nights, and it's up pretty firm each night too. So our market's following right on behind it. But why that now translates into higher gold jumping $20 in 24 hours? Look,
I mean, let's try and push this analysis and say if we've got better than expected retail sales out of the US, could the inflation threat be on the horizon? And perhaps that's why gold is rallying.
I've sure felt that for a long time. I was probably one of the premature Cassandras saying, ooh, inflation's a worry, inflation's a worry. But I've been much less worried about deflation than most people. The States is pretty jacked up how to keep inflation going, how to avoid deflation. And then they've got an expert running the central bank on deflation. So these could point to deflation. They can't cut interest rates any lower. And just take a look at these bond yields. You've had a 30-year bull run in bond markets. It's got to come to an end. Bond markets don't just have bull runs forever. And you've just seen the US long bond and medium bond just have these dramatic turns in the last 10 days. And Investec was saying we're out there actively shorting bonds now. We think they're too cheap. I agree with Investec all the way on that. So yes, if it's perceived interest rates are going to be raised sooner rather than later, that's probably going to weaken the currency, but there's still a big jump in gold and platinum.
A safe assumption perhaps to make is that with that weaker US dollar that we're seeing at nearly 130 on the euro dollar, money is being deployed into this precious metals. I mean, because platinum's also rallying. We're up $34 on the platinum price today.
Yeah, I know. And platinum is more often perceived as an industrial metal like aluminum, zinc, copper, nickel. So all of a sudden they're perceiving platinum as a precious metal now.
And just to throw confusion further out is copper, which is now pulling back $100, and where it's $7,515 a ton. And if there was positive news out there, you would expect copper, that industrial metal, to be rallying as well.
Well, at least to stay flat. I think it's had an amazing rally. This copper price was $1.20 a pound, 2 years ago, and now it's $3.50 a pound. So it's an unbelievable rally for copper. The other base metals haven't done nearly as well. It's been the top performing base metal, I think. But yes, I would have thought it'd be at least flat when you see the strength in oil, gold, platinum.
Well, let's try and make some sense of our market. We saw a flat performance on the JSE all share today. MTN is at the bottom of the top 40, down almost 2%. I haven't had the opportunity to talk to you about MTN. What are your thoughts on this one?
I'm the worst guy to talk to about MTN. It moves more on rumors than I think it does on fundamentals. It's quite a cash generative share, but there's always big moves there that I can't attribute to any fundamental change. It's usually just rumors. If you tell me how weak's it been?
Well, we're looking at MTN now at 122.49. I'm trying to read data while we're on the desk to make sense of what's happening on the markets right now.
The fact is, it is strange that we've got pretty strong, decent U.S. markets today, and our financial industrials came off. I'm surprised.
Because we've got Aspen also trading lower. We're down 1 1/5%, and that's ahead of Aspen's results out tomorrow. Again, there are a number of market commentators who feel that this one is fairly expensive, or let's use the terminology, very expensive.
Yeah. Look, our market is not cheap. It's way above its long-term price earnings ratio is about 12, and we're on about a 16, I think, 16.5. So we're at the upper range, so we're discounting a lot of good news. And these industrials keep punching new highs when we had meltdown 2 years ago. So maybe
Is Aspen a stock that you would stay away from, though?
I can't comment, Bronwyn. I just don't know enough.
And then looking at Sasol, the stock closed up 3 2/3% yesterday, 5% increase in headline earnings per share. Today, we are up another 1% on Sasol at 303 Rand.
I think I've been pretty consistent on Sasol. You don't want to be short that stock. You just look how many people are driving cars. People are not giving up driving. The Chinese are learning about driving. Americans still love their big rigs. You cannot be short Sasol. That's got to be a core holding in anybody's portfolio.
Even with the rand looking as strong as it is, and management saying that it's the biggest external pressure, the strong rand on their profitability.
It is, but it's such a good hedge in case you're wrong with the rand. And yeah, they're battling with this rand. But look, here's a company battling with a strong rand. Those were pretty good results. Pretty nice dividend. And it's got something everybody needs, oil.
So upside for Sasol, is this a long-term play?
Yeah, it's a medium to long-term play, but you can lose a lot of money being cute short-term.
Coming back to the broader JSE all share, and you said that the market is looking relatively expensive right now. Would I be quoting you correctly?
Yeah, it is looking a bit expensive, especially in dollars, but even in rands. But again, where are you going to put your money? Do you want to go into gold at 1270? Do you want to sell the Aussie, which is 40 pretty nice diversified shares, and go into gold that's at a 10-year high, an amazing 10-year high, whereas our market is still trading 20% below its high of a couple years ago? I think it's much safer and more prudent being in our market.
You're not in the double dip recession camp, are you?
No, I don't think we'll have a double dip recession. I think we're going to have very wishy-washy, sideways off and on. But
I had this debate with George Glinas, the MD of ETM, last night, and he was saying that quantitative easing out of the central banks will stave off that double dip recession.
Yeah, I think he's right.
And in terms of what we're going to face, if we see money continuing to be printed, we are just delaying the inevitable, aren't we?
Yeah,
going to battle to come out of this one at some stage.
We are. A lot of the world, especially the part of the world that got us into this mess, does not want to face up to it. And I'll say the US first, and they're battling Britain. People do not like that word austerity. They want to keep postponing austerity. Only austerity is going to clean up the mess we've got. And as you said, this quantitative easing, they're going to keep dribbling that out because people don't want to face austerity all of a sudden. And that will keep us out of a double dip. But yes, it's postponing cleaning up this mess properly.
And if we take into consideration what we're saying, we're looking clearly at two worlds. Emerging market versus developed. If you were to put your money or deploy your capital anywhere, is it firmly in the emerging market space?
No, it's not firmly there. I think there's still hope for the States. I don't know if they're going to fix this problem medium term, long term, but with their quantitative easing and the diversification of those large US companies, because they're like the big companies operating here, Anglo-American, it's more than 50% diversified out of South Africa. So are those large US companies, IBM, General Electric, even General Motors and Ford. So the US economy can just chug along, keeping it out of recession, but those companies can actually do very well because of their foreign diversification.